Hello and welcome to Market Watch for the 22nd of January 2018. Short week, so happy Australia Day to those of you that actually get to enjoy it. We'll be probably working, but in saying that, be around and be aware that it therefore does shorten a whole heap of things that are going on in the Asian region as well. It therefore will play catch up Monday week, and you need to be probably cognizant on that from just the point of view of an admin idea. So just remember, Friday is actually a day off for us, but not for the rest of the world, and therefore it will filter through into your trading. Do also therefore want to talk about what's going on this week from a macro perspective and why it's quite an interesting sort of scenario at the moment. Chart on screen is Dixie, which is the dollar basket. So this is the US dollar against everything that it trades against. And you can see very clearly that I have to go back quite a while here, back to 2014, to see it breaking where it currently is, which is at 90. And it's realistically almost in free fall in terms of what's happening there. The euro dollar is very positive. Dollar yen is very positive. Aussie, as you probably well know, is chasing 80 cents. And all of that feeds into positive sides and the reasons for it, which is the euro and also the Aussie is a risk idea, emerging market chasing, the fact you're looking for high-end growth, etc. That's great. But the US dollar, the fact that it's sinking against everything, just puts that little bit of risk into it. And why I want to highlight it is on Friday night for us here in Australia, so on Australia Day, you will actually see US GDP for the fourth quarter, and there just were slight signs that maybe, just maybe, the whole mania around what has been an interesting 2007 from the Trump presidency coming to the fore, and also just maybe, just ever so maybe, that things are not as strong as they possibly could have been, despite the fact that earnings are there. So just keep an eye on that. I also then want to highlight two other things that are happening this week, and that is in this region and also over in Europe. Europe is going to likely be the bright spark. And the reason for that is finally, after all the work they did through the Euro crisis, all the stimulus that they've had to do to keep, particularly the periphery, places like Italy, Spain, Portugal, etc., afloat, are finally actually just sort of coming together to help the whole zone. And the ECB meeting, therefore, just comes into a little bit of its own, because if they do show that growth is coming, that is actually a positive for us, because it's a China story. Europe is the second largest consumer of Chinese products behind the States, and if they pick up, you've already seen Chinese GDP, which came out last week, being quite positive, really showing that they are actually driving ahead. And the demand for Australian exports, particularly commodities last year, therefore is justified. So all of that needs to be part of your thinking, and therefore Mario Draghi is quite important, because if he starts to talk about possibly tightening in 2017, that also starts to come into whether or not growth is going to be sustainable for the full year or just half. Otherwise, it's pretty quiet, and that's probably a good thing. It's been a real interesting first month of the year, because the week after we start talking about what is a big month. February is always huge from an earnings perspective in Australia, but also it's the first RBA meeting. We also get a whole heap of data like inflation, wage index, etc. So next week and the week after it really ramps up. But this week, just reflect on what's been a really positive start to 2018 and hope the momentum follows through.